All right, let's dive into a piece of American finance that you probably don't think about every day, but you should. We're talking about the Federal Savings Association. And look, this isn't going to be some dry history lesson. It's really a story about community, about crisis, and about the surprisingly simple logic behind a special kind of bank that literally helped build the country.
I mean, this really sets the scene, doesn't it? Long before you could move money with a tap on your phone and way before these mega banks stretched from coast to coast, there was something much more local, much more focused, right at the heart of so many towns, and they were known simply as thrifts.
Okay, so what is a thrift, really? The whole point is right here in the definition. A thrift wasn't just another bank. Its charter, its entire reason for being, was all about two things: giving regular folks a safe place to save their money, and, this is the big one, using those savings to help other people in that exact same community buy a home.
So where did these things even come from? Well, they didn't just pop up out of nowhere. Their creation story, you could say, was forged in one of the toughest times in American history. They were born as a direct answer to a massive national crisis. As you can see here, it all kicks off in the 1930s, right in the middle of the Great Depression. The entire banking system was a mess, and owning a home was just becoming an impossible dream for millions of people. So the government steps in, and their response? The Home Owners Loan Act of 1933. This act created these federal savings associations with a super clear mission: stabilize the housing market and get people to believe in saving money again.
And the way they were designed was actually kind of brilliant in its simplicity. The government basically put this protective bubble around them by making them focus almost entirely on home loans, residential mortgages, and limiting other riskier kinds of loans. The charter kept them laser-focused. Their job was to help families in their community, period. It was a model built for stability, which was the exact opposite of the risky, complex banking that had just failed the country so spectacularly.
Okay, so with that solid foundation in place, thrifts were perfectly positioned for the incredible boom that was about to completely change the American landscape. They were about to step into their golden age.
This quote right here just says it all. When you picture that post-World War II expansion, the explosion of suburbs, the baby boom, you have to understand thrifts were the financial engine that made all of that possible. They were, quite literally, the backbone of that entire era of growth.
And this is where you see their dual role so clearly. They weren't just lenders, they were these incredible community institutions. They provided the affordable capital that allowed millions of families to buy their very first home, which in turn fueled the rise of entire suburban towns. They became these trusted local anchors, part of the very fabric of the communities they helped build from the ground up. But you know how it goes. That golden age couldn't last forever. The economy started changing, new pressures came along, and the very structure that had made thrifts so stable was about to be put to the test. This led to another period of crisis and, well, a profound transformation. This timeline really maps out the major shocks that changed everything for the industry. It all kicked off with the savings and loan crisis back in the 80s. And this wasn't just bad luck. Oh no. Deregulation had allowed a lot of thrifts to make risky investments that had nothing to do with home loans, leading to some spectacular failures. Then, fast forward a bit, after the 2008 financial crisis, Congress passes the Dodd-Frank Act, and that leads to another huge change in 2011. The regulator that had always watched over thrifts, the OTS, got merged into the much, much larger OCC.
And just to be clear, this was a huge deal. For most of their history, thrifts had their own dedicated watchdog, the OTS, which only cared about them. But after 2011, boom, they were supervised by the OCC, the same agency that regulates the giant national banks. This completely changed their world. It was the end of an era of specialized oversight, and suddenly they were under the same big regulatory umbrella as the Wall Street titans.
So, after all of that, the crisis that created them, the boom years, and then the crises that transformed them, what exactly is a thrift today? I mean, what part of that original mission is still alive and kicking?
That is the essential question, isn't it? In our incredibly complex modern financial world, is there still a place for an institution with such a simple, community-first mission? And the answer, which might surprise you, is a resounding yes.
Because that core thrift logic, it's still there. It's the DNA that survived all the changes. And it really just boils down to these three simple but incredibly powerful ideas. serve the person who's trying to save, empower the family that's trying to own a home, and in doing that, act as an anchor for the local community. And that right there is exactly why they still matter so much. In markets all across the country, federal savings associations are still a vital tool. They provide healthy competition, they have specialized knowledge in mortgage lending, and they maintain a focus on community banking that, let's be honest, can sometimes get lost in those bigger, more complex institutions. And maybe that's the ultimate takeaway here, that even in our fast-paced age of global finance, the simple, powerful idea of a bank that is rooted in and truly dedicated to the prosperity of its own local community, well, that's an idea that doesn't just survive. It endures.